The S&P 500 as we get ready to trade October week 3. So we have monthly OPEX this week. Let's start off looking at this backed out version of our simplified daily chart, the one that we use to focus just on the simple moving averages and the forks. And this is backed out to the 2020 low to just go over one more time, because we used to go over this all the time at the beginning of this year when the selling first started. But we haven't gone over it in a while, and just in case there's anybody who's forgotten what's going on here, let's just review. So the low that we just hit this week at 34.91, that's a new low for the year, and it was a look below 35.05. 35.05 is a key level because it's the halfway back point from our all-time high we just set this year to this low that was set in March of 2020 during the COVID lockdown. And you can see that from this low in March of 2020 sprang this rally that took us to the all-time high. And officially, as of the week we just traded, we've retraced half of that. And we are looking to see if this is going to be a bottom, a tradable bottom to take us through the rest of the year, or if this is going to break down and we are going to need to test lower. And if we are going to need to test lower, there's probably nothing stopping us until we get down to the 3200s. At 32.34, we would have a drop here that is equivalent in percentage to the drop that we saw from the high going into the COVID sell-off. That would take us down to 32.34. And when we look to the left, you can see that this was an area that was back tested a couple times off of the initial rise from that low in 2020. You can see it was back tested here in September of 2020, and then again tested and held in October of 2020. So if 3,500 is not going to hold us, if we are going to back test and break the low that we just set this week, maybe we need to brace for a couple hundred more points lower down to the 3,200s. Okay, so let's take a look and close up of where we are at. You can see that we have broken down below the median line of our bear fork. We rose back above it on that day that we broke down, had a huge rally that took us back above the 10-day, even almost to a look below the 20-day. And then on Friday, we turned around and failed and sold back off again. Looks like we came back and we closed back down below the median line of our bear fork, but we held a higher closing low. So maybe this was a necessary thing to have happen to test that closing low, because this reversal was so huge and took us so far off of the low of the day and closed way the heck up here. Well, maybe the next day we needed to test and see if we could hold a close, especially on a weekly basis, above the 2022 closing low at 35.77, and that we did. We closed at 35.83. Also, 35.80 is an 80 handle rule number. If we can continue to hold around 35.80, we're going to take another shot at 3,600. And if we can get through 3,600, we go 3,650 to 3,680 to 3,900, so on and so forth. Looking at the intraday chart, you can see how this all played out intraday. The low was on Thursday, came to us right off of the open, and then this massive rally up to end the day with a close back above the 10-day simple moving average. A bump up open in the morning on Friday, only to turn around and just plunge and kind of sell off here. But you can see that intraday, we kind of were holding along the halfway back point of Thursday's rise. That was at 35.88. We closed below it, but as long as we're holding above that closing low and closing above 35.80 as well, maybe using our rules that we've been following all along, the 80 handle rule, the halfway back rule, the closing low rule, maybe this is telling us that we have two things on our side with the close above 35.80 and the close above the closing low, that maybe the fact that we closed below the halfway back of this day's range, that's going to be okay. I guess we'll find out in a few hours when futures reopen, see if they open strong and we begin to rally and we go into Monday with a gap up open, or are we going to go into Monday with a flat or gap down open and have to go test this low altogether, as we discussed at the beginning of the video. When we take a look at the roadmap, where we just really focus in on what these SMAs are doing and what our recent daily highs and so forth are doing. You can see that on Friday we made a new high for the week and we pushed our way up into this gap that would take us all the way back here to the October 6th close. But we kind of looked above the 20-day simple moving average and failed. Also, you can see back here at the October high, this was a look below the 20-day and fail. And back here at the September high, it was a look above the 20-day and fail. So what we really need to see happen on Monday, if we do come out of the gate flat to rising, or if we gap up open out of the gate on Monday, it would be a gap up open above the 20-day, and that gap needs to hold, and we just need to go. Because over our heads right now, we have the 50-day crossing down through the 100-day, and that might have been a technical that kind of fed and fueled this sell-off altogether on Friday. If we can open up and get through the 20-day and hold it and just go, our next target is going to be to make a new high for the month of October, and then get to this 50 and 100-day simple moving average pair. That would be a change in trend, closing above the, well, we did close above the 20-day here at the September high. So I'm not going to say that one close is going to mark the bottom. We need to get a couple, 2-3 closes in a row above the 20-day, and then maybe we do have that tradable bottom. Since we have OPEX week, who knows what the plan is? Maybe the plan is to slam us because everybody has loaded up on short calls. Maybe everybody is shorting those 3,500 calls, all the institutions and stuff, and maybe we're going to get slammed below 3,500 this week. Maybe they are shorting 3,700 puts instead, and we're going to get smacked to the upside and try to rally and get above 3,700 and close above there. We'll see, but keep in mind that it is OPEX week, and it all kind of culminates on Wednesday. That's where it really sort of all hits the fan, and we see what the plan is for OPEX. Okay, I think that's about it. That's all I've got to say, really. You know, to the upside, we gotta get through this 20-day simple moving average, and maybe make a new high for the month of October. To the downside, if we're going to open and fail this halfway back of Thursday's range, we're going to have to go fully test Thursday's low and that 3,500 handle again. And if all that doesn't hold, maybe we're going to be moving our way below 3,500 towards that 32-34 or so level. Have a great rest of your Sunday. Hope this video helps you out this week. As always, good luck and good trading.